Hi guys, welcome to my channel, Forex with Temilo. Thank you for subscribing to my channel. I really do appreciate, and if you are yet to subscribe, please click the subscribe button. It will really go a long way for me. Okay, and in today's video, I'll be talking about how to stack trades correctly using the smart money concept. Okay, when you're entering into trades, you don't want to get into multiple trades at random areas. You want to make sure you are entering the market at strategic and right zones, okay, in order to make profitable trades. Okay, so now let's have some illustrations here. Just as you know, in the forex market we have two types of structures. Okay, we have the bullish structure and we have the bearish structure. Okay, the bullish structure is the structure in which the market keeps going higher, okay, taking a previous high. A previous high is being taken out by a leg of move, by an impulsive move to the upside. And while the bearish structure, in this structure we see the market going down, the market sells going down, taking out lows, previous lows in the market. So first, let's start with the bullish structure. The bullish structure, now in the bullish structure we always have a high in the market, which is then taken out by a leg, okay, by a push. It's being taken out by this push to the upside. So once this high is being taken out, is broken above, we create a new high, which is called higher high. We create a new high. So the impulsive move from this low up to this level always house some kind of demand zone. A demand zone is being housed at this area where price will come back to mitigate before pushing higher again. Okay, so it's that simple. Once we break above a particular high, market will come back to mitigate a demand zone around this point in the market. It will come back to mitigate it, that is the inception of this push to the upside. Price comes back and mitigate that zone. Okay, price comes back, mitigate this zone, and then push higher again. These scenarios, this structure we see in a bullish pattern. Okay, so now we want to take our buy trade from the mitigation of this zone. Then we take our profit at that previous high that was created before this move to the downside. Okay, so this is how to get into your trades. You wait for a return back to the demand zone that caused the break of structure. Also, as you can see again, from this lower high and higher low, we then went up, pushing up again, pushing up above this previous higher high, creating yet another higher high. So now that we've created a new higher high right here, market will come back to retrace and mitigate yet another demand zone that will cause this break of structure. That is this zone right here. This zone right here will house a kind of demand. Okay, a demand zone is being housed at this area, which caused this impulsive move to the upside, breaking above this higher high. So price then comes back and mitigates this zone. So at this level again, we will have some kind of demand zone. Then we can enter off from this zone. We can get into the buy trade and take our profit at the previous high right here. Also, once this high is being taken out again, we can see we have a break of structure. This high is taken out by this higher high right here. Then we wait again for a retracement, then a mitigation of the demand zone that caused the break of structure. Then again, we can get into yet another buy. So taking our profit at this previous high, okay, until the market then breaks below this last low, changing direction now to a bearish direction. Okay, so this is how to stack trades correctly in the forex market. This is how to start trades correctly. You don't just want to, oh, this is an higher, this is a higher high being created, and oh, price broke above this high. Since price broke above this high, this must be that the market is going bullish. Then you proceed to take buys from A. Trust me, you will be liquidated. Your position will be liquidated, because as you can see, price came back, took out people that were buying at this point, at this breakout zone, took them out and came down, there causing your position to be liquidated. So we don't want that. That's why you need to get into trades at strategic points, at demand zones. You want to get into your trades at demand zones in a bullish move. Okay, so that this is for the bullish structure. Okay, so let's move to the bearish structure now. For the bearish structure, is just the same thing, but in this bearish structure, we want to see lows being taken out, just as we have highs being taken out in this structure. For the bearish structure, we want to see lows being taken out. Okay, so once a low is broken, price will come back from that low to mitigate a supply zone. In this case, a supply zone, there will be some sort of supply zone around this level that price will come back to mitigate before going bearish again. Okay, so at these zones, we want to look for supply and take our sell trade of this supply zone. Okay, then we target the last low, and target this previous low. Okay, so the same thing happens again. We took out the previous low that mitigated the supply we have. Price breaking below this zone, all we need to do is look for our supply zone at this leg of push. At this leg of this push, we look for some sort of supply zone right here and take our sell trade of this zone. Okay, taking profit yet at the low, the last low that was formed. So also, once we take out this low again, then we have another break of structure. We wait for price to retrace back up and mitigate another supply zone, and we take our sell again from that zone. So this is how to properly stack our trades. But first, you must know the overall direction of the you want to know the overall direction of that pair you are trading. So for our case study today, we'll be using Cadjpy as an example. Now let's get into a real chart. So this is Cadjpy. Let's remove this. So on Cadjpy, first we want to know what is going on, which direction is the market going towards. Okay, so let's go to the daily time frame now. So on the daily time frame on Cadjpy, we can see that Cadjpy has been bearish at this zone, creating lower highs and lower lows, lower highs and lower lows, and suddenly price has broken above one lower high, and yet broke above another lower high, broke above yet another lower high. Okay, so now that it looks like we are breaking structure, we know for sure that price wants to push higher. Okay, we broke above this lower, and this lower. So we can see that price is trying to go higher. So, and once we break structure from our illustration, we say price will come back to mitigate a demand zone, right? A demand zone that caused the break of structure. This was our first break of structure, and as you can see, price left an unmitigated demand zone right here. We can see imbalance also resting right here. We can see that price was not efficient at these zones, while market was pushing all the way. While market had this push up, we had inefficiency around this zone. and we have this demand zone that was left behind unmitigated. So we know for sure that since price has broken above, all we need to do is start looking for entries to take market back down into this zone. Okay, so you can wait for this zone to come to be mitigated, then take your possible buys. But then this is a big move. We want to try and catch some sell trades back into this zone. We know where market is coming to. We know price is coming to this zone. So let's make use of the opportunity and catch some trades back down here. Okay, so as you can see from this daily time frame now, the price found a supply at this zone. Price found this supply, mitigated this supply, and price is breaking below the previous lows that pushed us into this supply zone right here. You can see price breaking below this low. So how do we take our sell? How do we take our trades from this supply zone? Okay, let me cut this and let's move to like the 1 hour time frame or the 2 hours time frame. So now that we know where the market is going to, and if we mark out this structure, we can see from this low we created this high, this low, this high was created, this low, another higher high, a higher low, then this. So for this structure, we want this to be taken out now to be able to confirm that this mitigation is taking us lower. Okay, we want to see this break of structure. We want to see this low being taken out. Okay, so now okay, we want to see this low being taken out. So once this low is taken out, we'll start looking for our supply zone to take our sell trade from. Okay, so let's play this market, and as you can see the break of structure happen right here. This structure was taken out, indicating that we are going bearish. So at this point in time, we can start looking for our supply zone. Okay, and on the 4 hours time frame, we can see a clear supply zone that wasn't mitigated right here, that was left unmitigated. Okay, so and this we can take our sell trades from. In this video, I won't be talking about how to refine supply zones or demand zones. That will be in another video. There are ways to refine your entry in order to have a small stop loss. Okay, so now I can take my profit at this level. I can take my profit at this level because this is the last low that has broken out this structure, and this low now is coming to mitigate this supply zone. Okay, so I'll be happy to take my profit there. But overall, we know that price has the potential to come down to this daily demand that we've marked out from the demand zone. But for now, because that will take a long time, as we all know that markets will not just in one day push down into from a higher time frame supply and go down to to another higher time frame time frame demand. This will take long time. Okay, so we want to be in and out of the market as a day trader. So now we've been tapped in this position right here, and if we play, you can see that. So at this point in time also, if we go down to the lower time frame, we can see, if we go down to the lower time frame, we can see that if we map out the structure from this, we can see that we created high, low, high. Market has now broken below another higher low right here, and that's why at this level, let me quickly go to the 30 minutes time frame for more clarity. Yeah, on the 30 minutes time frame, we can see that if we mark out our structure from this low, we took out this lower high, we add this higher high, this higher high gave this low, another higher high low, and this, and we can see that we broke below this higher low. So once we break below higher low, we know market will come back to mitigate a supply zone that caused this break of structure right here. And that's what we can see at this zone. Okay, we can see yet another mitigation of this supply zone, but this pushed more above this, still tapping into this previous supply. So this zone was responsible. This zone right here was responsible for this push, and this could have been yet another entry. This could have been another entry with your stop loss at the previous high, and also still targeting this low. Now we have two positions running on this trade just by understanding break of structure and retest. Okay, so now we have two entries right here. Okay, and let's have the market run. And take profit was so take profit was it right here. So this is how to start trade. We did not just say, oh, the market is going down, let me keep adding positions. Oh, once the market is here, I will add one position, I will add another position, I will add another position. No, you want to make sure you are adding your positions at strategic places, at the right supply zone in the case of sales. Okay, so now that we've broken structure, you can see again we've broken this structure right here, this low. We've broken this low, giving us another break of structure. Now that we have this break of structure, from this leg, from this high to where we have our break of structure, we know for sure again market is going to come back, retrace, and mitigate yet another supply zone at this area. Okay, market is going to come back and mitigate another supply zone at this area. Okay, so now we need to refine which zone which supply zone we have. And as you can see on this 2 hours time frame, we have this supply zone, though it has been mitigated on this time frame, but if you go to another time frame, I think it was not properly mitigated. Okay, you can see we have little imbalance right here. Okay, but let's take the whole 2 hours time frame as our POI, as our supply zone. So we'll be expecting price to come back, and we're expecting price to come back to mitigate this supply zone. Okay, and we have our take profit at that low. So let's play. Okay, market still pushing now. Okay, market doing its thing, you just have to wait. And though if you are interested in taking some kind of buys around here, you can also take your buys, but sometimes you don't have to chase all trades. Okay, you don't have to chase all trades. You want to always wait for high probability trades. Okay, trades that can give you a good RR. So now we've been tapped in at this supply zone again, and we are looking to take our profit at this zone. Also, you need to be very cautious and observant of the chart anytime you are taking trades. As you can see in this price action here, there's something I can notice. At this particular zone, I can see that at this zone, price keeps bouncing off this kind of zone, this support zone. Price keeps bouncing off from this zone. So for me, if I'm on this chart at this particular time, I want to take this set of equal lows to be area where I'm going to take my profit. Okay, because we can see price bouncing off several times at this zone. Also, this is a this is some kind of liquidity in the market, okay, because at these zones there is a stop loss, various stop loss at these zones. Retail traders buying this market have their stop loss at this zone right here, okay. There is liquidity at this zone, because then we can see the market come to this zone right here. Sorry about that. We can see the market at this zone. Retail traders are buying off this support zone. Yet again, we had another retest at this zone, targeting this high. Yet again, another retest of this zone. Trust me, there are a lot of buyers, retail traders buying off this support zone. Okay. Yet again, another buying off this support and this as well. So we know for sure that liquidity is resting. Sorry about that. We know for sure liquidity is resting at this zone. Okay, so and at this zone also, markets could also bounce off again and push back up, and we want to make sure we are taking our profits. We want to make sure the profits we've made, we don't lose the profit. So for me, I would love to take my profit off this zone, even with the knowledge that this place is a liquidity zone, and market we want to take the liquidity and the people stop loss that are resting below this low. So but for now, I'll take my profit here, and also I can also cite some kind of imbalance at this zone. Okay, I can cite this imbalance. I can also take probably some partials of my profit at this level and leave some to run to this level, and even leave some to run down to this previous low, because overall I know where price is going. Okay, so let's play. So market tab, and yet again we can see, so this our take profit was it, our first take profit was it right here, and yet again we can see, let's cut this. Okay, at this zone right here, you should take a look at your structure. From this low, we created this high, we created this low, this high, this low, this high, this low, yet so this high. As you can see, we broke structure at this low. This structure was taken out, okay, and it was this structure being taken out was taken out with an impulsive candle, okay, a strong momentum candle. So we know anytime we have a break of structure, price will always tend to go back to mitigate the supply zone that caused the break of structure. So this is another good area. This is another supply area to take another entry from. So we have this supply zone. Okay, so this is another supply. So we can have our entry from right here with our stop loss just above this supply zone, and still targeting the same area. Okay, so now on this from this zone we now have two entries. Let's play that, and we were tapped in perfectly into this 2-hour supply. So now at this rate we have our first trade. At this point we have our first trade and we have our second entry. Okay, so now again, if you take a look at the whole structure, we can see yet another break of structure, another low being taken out right here. You can see this low is being taken out again, and once we have a break of structure, we'll be expecting a retest again. We'll be expecting a retest of the supply that caused the break of structure. And for this trade, we can see a big gap that market created right here. The market created a big gap right here at this level. Okay, so we know that price will come back to fill this imbalance up right here. Price will come back to fill this imbalance, and we can use this supply zone and take yet another sell trade. So we can have this sell trade marked out, this supply zone marked out, I mean. Sorry about that. So this is our second trade, and we are expecting a tap back into this supply zone for price to come back and mitigate this zone. So this will be our third entry, our third position on this trade. This will be our third position. I will take profit here, and this is already out of the way. Okay, so let's play. Yeah, so we got tapped again into this third position, and our third entry. So right now we are still aiming for that low, and at this point you want to make sure, now that we've broken about two lows already, this position now is expected to be in break even. You don't want to be risking anything on this trade again, and on this trade this should already be in break even or even in profit. I expect this first position, your stop loss, to be moved above this high, keeping you in profit, and this second trade should be at break even already, or at this high as well. Okay, so now that we have our third position, and we've been tapped in, so yet again we can see on this trade again, we can see, if we mark out our structure, we have this low creating this high, a higher low, higher high, higher low, then the higher high. Yet again our higher low was taken out at this point, giving us a break of structure to the downside, and once we broke structure to the downside, we'll be expecting price to come back to mitigate our supply zone that caused this break of structure. And I can see clearly a supply zone resting at this point. We go to the 1 hour time frame, we can see a supply zone with imbalance that was not properly mitigated. Okay, you can see this supply zone that wasn't properly mitigated with imbalance. And also if you look above, we can see yet another supply zone resting above this zone, though on some time frame it looked as if it was mitigated, but not properly mitigated on this 1 hour time frame. So on this time frame now, we can encounter situations like this when we are not sure of which zone price is going to push back to. Maybe this zone is going to hold, then push down, or this zone won't hold and price will push up into this zone before going down. So in this situation, you want to make sure you are looking for probably confirmation entries at this zone before taking your sell trade, and or if you intend to get into this trade aggressively, that is taking your sell just at this taking your sell at this level. You want to use half risk at this zone, then keep the rest of your risk to be used at this zone. That is, if you always risk 1% of your trading capital on every trade, on every position you are in, at this point in time, I will advise you use like 0.5% of your risk, and spread the remaining 0.5 to be used at this zone. Okay, so let's see if this zone will hold. So let's say we took an aggressive entry here with half risk, and probably we wait for another entry right here. So let's play. Yeah, as you can see, this zone held, this supply zone held, and we have our still targets in this side. So at this point, I expect that this trade is moved into break even and is moved into break even. So now we have our fourth position on Cadjpy just by knowing where price is going to. Okay, so now we have our fourth position. Let's keep playing. And as you can see again, we have yet another break of structure right here. This low has been taken out. Okay, we have yet another break of structure right here. What are we looking for? We'll be looking for yet another supply zone that we can take our sell trade off from. Okay, so at this point, I'll be looking to take this supply zone right here, this unmitigated 2-hour supply zone, and we have our entry right there with our stop loss right there, and still targeting this same low. Okay, still targeting this same low. So let's play the markets. Let's see if we have an entry. Yes, we were tapped in again, giving us our fifth entry on Cadjpy. Okay, so this is how to, and our overall take profit was it. So this is how to correctly stack trades, okay, using the right risk management as well. Okay, so SMC is really good. It's trading off demand zones and supply zones. It's really good, and you have a profitable, you tend to have a good risk to reward and more profitable trades. Okay, so I hope this video was of value to you. I hope you learned a thing or two from this video, and please kindly subscribe to my channel, and I will see you in my next video. And my next video may likely be on how to refine entries and get a very small stop loss, maybe stop loss between 2 to 10 or 2 to 15 pips. I think that's what the next video is going to be all about. Thank you once again, and have a nice time.